And good evening. It's Saturday, July 1st. My name is Dave Coker, and this is Talking About Finance. And good evening. Another lovely Saturday night after an equally lovely day. And an excellent week in the markets. It ended well for me. This evening, we're once again talking about finance because that is all I talk about. What can I tell you? I'm boring. We talk about making money, investing money, saving money. What else to life is there, I ask you? And keep in mind, our approach is different. Because even in this rollicking market, our single concern is not share prices going up, but cash flow. Yields, in other words. And one simple question. If we pay a price for a stock, what are we getting in return? We're not running a charity here, guys. We want to get paid. That's our number one goal. In fact, our only concern. When we buy an asset, what can it do for us? And how did the week end for me? I said positively, so you're curious. Well, I got paid. All of my stocks paid July's dividends. They're in the account now, which means Monday when New York opens, I'll be buying stocks. Oh, and just a word. Never do anything at the open. Wait until the session stabilizes. Overnight orders come in. They're matched up, both buyers and sellers. This is what we call the order book. This is how the market really works, under the hood. And the orders are executed at the open. The open is notorious for volatility and price swings. So I avoid it. And you know something? Usually I operate 15 minutes before the close. So about 8:45 p.m. London time, I'll gear up and start to look at what I'm going to buy and get ready to hit it. But Monday's going to be different because Tuesday is a national holiday and the New York Stock Exchange closes at 1300 or 1 p.m. on Monday. So I'll be going in earlier. And no, I'm not trying to trade. I'm buying and I'm holding. I'm holding on and collecting dividends, which is the way you should engage the markets. Buy and hold, buy and reinvest all dividends, and you'll see both your cash flow and your net worth soar. But we're at that juncture now where I've talked enough about what I'm up to, so let's talk about finance. Since this is month end and quarter end, we're going to look at the S&P 500 year to date. The S&P 500 closed the second quarter up 15.9%. Check this out, guys. 3 sectors outperformed the S&P 500, specifically information technology, communication services, and consumer discretionary. They both trumped it by about over 100%. Really amazing overperformance. 8 sectors underperformed the S&P 500. It doesn't mean they all lost. We see 5 sectors underperformed but still gained. Specifically industrials, materials, consumer staples, healthcare, and real estate. And 3 other sectors year to date actually lost money. Financials, utilities, and energy. And it's another week where we saw significant changes to the internals of this market. Not totally sure how this is all going to end up, but yes, if you're curious, I am building up cash just in case it ends badly. I never like it when the VIX gets so low, and it's traded down to 1359. It opened the week at 1344. It's still making me a little spooked with these huge gains. The 10-year note closed the week at 3.83%. It's up about 10 basis points week on week, down about 10 basis points year to date. Oil closed the week at $70.46 a barrel, up about 1.9% on the week, down about 12.2% year to date. And yes, falling oil helps lower inflation, so it's welcome. Unless you're holding energy stocks, which of course I am. But you know, I just buy for the dividends. I buy and hold, right? Yesterday was Friday, so you already know what I did. I bought Bitcoin and I bought Ripple. We saw a bounce up in the price of Bitcoin on news Fidelity's ETF. Then it dropped. But who cares? I'm not buying Bitcoin to flip it. I'm buying Bitcoin to remove it from circulation. I buy Bitcoin, I hold Bitcoin, I never sell Bitcoin. It's an odd hobby, but it's just what I do. And don't be fooled, there are a lot of people out there just like me. We buy and we're never going to sell. So now let's find out what me and my buddies, some 50 or so finance professionals from all around the planet, talked about last week, and I really have to introduce us. We are Global Wall Street. And between Telegram and our personal networks, our LinkedIn, WhatsApp, we know everybody. We know people directly, or we know people who know people at different financial institutions. It's always helpful to help with references or vetting potential candidates for jobs in industry. And there's a lot of people trying to move from academia into industry. Yeah, sure, they might have an impressive title, but what do they create? What do they do? Some of these people don't even blog. They don't even publish academic literature, which, jury's out if it'll help you get a job in literature. But guys, if you're not creating content, blogging, podcasting, infographics, articles, all the above I do, then you're a nobody. Just go to news.google.com and type in Dave Coker and you'll see what I'm talking about. And this week we're on Wall Street. We're reporting from the city of London. We're also in Miami, we're in Shanghai, and we're in Mumbai. We have people absolutely everywhere that matters, and even a few places that doesn't. So let's go. 7 slides for 7 days. Oh my gosh, you know something? I wish this was a job, because if it was a job, I would love it. First up, this is really, I'm wondering if this is startup comedy. I have no idea. This idiot, I have no idea who he is. Looks like Prince Harry. He'll put on like 30 kilos. I don't know who he is, but he's an idiot. Bankers aren't looting the planet. I'm willing to debate anybody on the premise that banking is the most profoundly kind and essential profession. We do a lot for the planet. He is taking a few extreme cases and generalizing, and that's why he is a big blipping idiot. And big, I mean, he's a big guy. He's got like 30 pounds rather. I have no idea who he is. It's ridiculous. Yeah, he's a total idiot. And here's one that I can agree with, and we talked about this a lot. I'm not so sure. Things really, I pay my taxes. I pay in 3 countries. Well, actually, I do pay in 3 countries, but I only have to remit to 2. Because Australia rolls into the U.S., but that's a long story. Yeah, I'm not so sure things are working the way that they should, considering the amount of money that we all pay in to the tax system. It's almost as though, call me suspicious, there's an elite that's profiting. Well, I'm just suspicious, and I don't know about that stuff, really. So it's a really, really weird thing. Here's an interesting one. And yeah, a young lady in the group, she's known to a couple of people. She did a couple internships, and we welcomed her into the group because it's not my decision. I know a couple of people have asked, could I join? I was like, oh, well, it's not up to me. But in any case, she joined the group about 6 months ago. She's doing an internship, a physical internship on Wall Street right now. And yeah, quite true. At least in New York on Wall Street, if you stay after 7 o'clock, you get dinner for free. If you're there, and when I was at Deutsche Bank, that was the rule. And also at Deutsche, the rule was if you're there before 7 a.m., you get breakfast for free. And if you stay to your seat at the trading desk during lunch, you got lunch for free. Now, I don't know what they pay for those meals. They were fine, though. I don't have any complaints. But guys, think about all the productivity. Because if you leave your desk, for instance, for lunch, you go out, you're going to try and get out and get back in an hour. But how many times have we all said we're going on our lunch hour and it turns into be 90 minutes? Yeah, it happens, doesn't it? And then you compensate by staying 90 minutes late. But that's not the point. The point is, by locking you into your desk, it's actually very clever. And they're grabbing a lot more productivity, which they pay a great deal more than they ever do for this food. It's really interesting. Oh, and here's a hat I want to get. Because I constantly tell people, especially my students at uni, you really want to avoid EBITDA. You really have to avoid it. It's really, really interesting. What you need to look at is EBIT. You want to look at EBIT, earnings before interest and tax. Then you want to look at EBIT, earnings before interest, tax, depreciation, and amortization. And I like a cap like this. It's almost cryptic. It's almost code-like, but it's very, very finance. So yeah, maybe I'll look it up. It's on Etsy, and somebody posted the link, and it's $30, guys. And I didn't even look at the pound sterling price. It's a little rich for me. But in any case, it's an interesting hat. Oh, and this is a wonderful one. Check this out. Yeah, this is good because listen to this. This is wild. We're having a debate on the channel about the impact of higher interest rates. And we know in the UK, for instance, a lot of people, they don't fix, they take on floating rate. Much less in the United States, much less in a lot of these countries. Look at them. United Kingdom's out there, looks about 18% or so. Netherlands is out there as well. The US, yeah, why on earth would you take floating rate debt in the United States when you can fix for 30 years? And you not only know what your first mortgage payment is, but you know what mortgage payment number 360, 30 years later is going to be. It's a wonderful product, a wonderful financial product. Yeah, they don't offer it in the UK. In the UK, the most you can fix is 7 years. And then at the end of 7 years, you get to have a meeting to talk about what your repayment terms will be at that point. So the bank is passing all the risk to you. In the States, the banks assume the risk, but they securitize the mortgages, don't they? So yeah, they're pushing the risk onto third parties that aren't present in the room. And this is an interesting one. I put this on a number of channels. Here's Lebanese pounds, the price of Bitcoin, and pow! Look on the right-hand side of that chart. My gosh. So as I tell people, right, you know, if you're holding on to Lebanese pounds in Lebanon, you're in a world of pain. If you moved all your money into Bitcoin in Lebanon, yeah, you're probably not really hurting that much because Bitcoin soared. It's very, very fascinating. And how many times have we heard this, guys? I've heard it so many times. Really, you know, $25,000 ago, I heard this, at least. I've been telling people for a long time, buy some Bitcoin, just buy a small amount, and hold on to it. And always someone looks at me smugly, oh, I'll wait until it drops. Yeah, okay, cowboy, you keep doing that. I just buy. I buy every week. You know my routine, right? I don't look at the price. I don't care. I buy. Same amount of money every week. I know Bitcoin is going up because I get less Bitcoin than the week before, or I know Bitcoin is going down because I get more Bitcoin than the week before. Waiting until it drops, yeah, you're a loser. You really, really are. Don't do that. Don't make that mistake. Just buy it. And then buy some more. A week later, a month later, a quarter later, it doesn't matter. Just keep buying, guys. Bitcoin's our best hope. It's been a real pleasure, guys. Thanks so much for your time. My name is Dave Coker. Have a great evening and a fantastic weekend. It's going to be an awesome week coming up, except for New York. They're closed, and that's sort of insulting to us sitting here in the UK because we don't celebrate no Independence Day. Take care.